Hello dear traders, welcome to the Trading Hero channel for our weekly trading results overview. This week, all portfolios ended with profits. Let's start with a quick review of the 5K portfolio in version 1. This week's profit was 0.4%, the 5K portfolio in version 2 delivered 0.6% profit, the 5K portfolio in version 3 0.3% profit, the 10K portfolio version 1 0.33% profit, the 10K portfolio version 2 0.16% profit, the 10K portfolio version 3 0.4% profit, the 20K portfolio 0.2% profit, the 50K portfolio 0.5% profit, the 100K portfolio 0.25% profit, and the 200K portfolio 0.3% profit. Let's now switch to the MetaTrader and take a look how we traded this week. We'll start with the first currency pair. This is the Australian dollar against the Canadian dollar. We are currently on an hourly time frame, and the gray rectangle highlights the trading area of this week. As we can see, the price has finally started to decline. We had been in a range for quite a long time. Looking at the broader picture, we can see that there was a local uptrend which was finally broken this week. And that's not surprising because on the daily time frame we can clearly observe a downtrend. So if we set aside the situation caused by the introduction of new US tariffs, we can conclude that the market continues movement in the same direction it was heading before those changes. Therefore, we expect the asset to keep declining. We have quite a few open buy positions, and we will continue to average into them. This week, several buy and sell trades were closed with a total profit of $350. The next currency pair is the Australian dollar against the New Zealand dollar. For this asset, the market stayed within the previous week's range for all this week. As we can see, the price attempted to break out of the range 3 times, but all attempts failed, and the price remained inside the range. Only one trade was closed with a profit of $46, which is the total profit for this week. The next currency pair is the Australian dollar against the US dollar. There were no closed trades on this asset as market volatility was quite low. The price continued to move within the same ascending channel. Let me remind you that this portfolio uses 3 algorithms trading this pair. Unfortunately, the volatility this week was not sufficient to allow us to enter the market. Looking at the current time frame, we can still observe a bullish trend. So, unlike the previous currency pair, there is a strong chance that this asset may rise next week. Let's now take a closer look at the British pound, but today we'll focus not only on technical analysis, which we've already covered in the previous videos, but more on the volume structure. We'll look at the British pound futures chart, currently on the daily time frame. We've loaded data for the current year. Observing the market movement and the evolution of the trend, we can see that an uptrend started at the beginning of the year. Within the trend, there were zones to which the price returned, and each return resulted a correction. The same pattern occurred when some of the algorithms trading the British pound were closing their positions. At the moment, we have new zones that the price may return to in the nearest future. Let's analyze this entire historical context in motion and look at the zones we might expect and where we could potentially see a correction soon. If we look at the entire situation dynamically, we can see that the price reached the previous zone with a correction, and from that correction an upward move started. Then, after a new zone was formed, a local high was created in that area, and afterwards the price returned and clearly retested the previous zone. Then the price continued moving upward, and here we can observe an interesting situation. Usually the price returns and reacts to the previous consolidation zone, but in this case we haven't seen a return to these levels yet. So there is a chance that the price may still come back to them. However, after the price started to rise, it entered a new phase of consolidation and formed a new zone. So, in order for us to get a correction next week, it's very important that the price returns to this new zone. In other words, exits from the previous zone where it's currently located. Only then we can start expecting for the price decline. Let's now switch to the hourly time frame and I'll show you exactly what I mean. We are looking at the same chart, just converted into cluster view. We can clearly see two local zones of interest where the largest volumes were traded. There is a clear market reaction both during the decline and during the upward movement. At the moment, the price is still reacting to those volumes, which could be a part of a selling climax. As for the negative delta, it is gradually increasing, but it's still too early to speak confidently about the reversal, as the market remains in consolidation. This information mainly confirms that the situation is still tense, but there are already certain signs in the market that suggest we could expect the correction next week. I know, you'll say, I said the same thing last week, and you'd be absolutely right. We really did have a great setup last week. There was a local uptrend, then it was broken, and on Monday the downtrend started to develop, but unfortunately on Wednesday there was a news release that was not favorable for us. I'm referring to the CPI data released from the US. We can see that the previous values were lower than expected, meaning the market was expecting an increase, but the actual data came out even worse than the previous period. This triggered a strong market reaction. And despite the fact that on Thursday morning we had a positive news for us, a decline in the UK GDP, and we saw a clear reaction at 9 AM, the price started dropping sharply. Just a few hours later, the move was completely bought back. If we talk about the second half of the week, there was a core PPI release from the US. Again, weak data. And later on, we still have the consumer sentiment release at 5 PM. More significant changes are expected next week, as we'll see the retail sales data released, which is a very important report. We also have the UK CPI data on Wednesday, and also the US interest rate decision and a FOMC statement on the same day. This can also have a strong impact on the market. And on Thursday we'll have the interest rate decision and statement from the Bank of England, which could also significantly influence the future movement of the price. So we are waiting for the market's reaction to the next week's news. This week's profit is $194. And we move on to the next currency pair, GBP CAD. This pair looks much better. We have a logical downtrend, and if we'll zoom out and look at the bigger picture, we'll see that the main trend is still upward. So this downtrend is just a correction to this larger movement. But this correction is deep enough to allow us to start opening buy positions, which we've already done. And now we're waiting for the rebounds from the previous support level. This week's profit is $72. Next currency pair is USD CAD. There were no close trade, we're still holding positions consisting of 3 trades, and we're waiting for a market correction. Let's switch to the daily time frame and take a look at how deep this correction is. You can see that the price has significantly decreased since February, and this is completely logical. If you look at the bigger picture on the monthly chart, you'll see that the price was reacting to the highs of previous years, namely 2019 and 2015. This tells us that the market has long-term ranges, and when price reaches either upper or lower boundaries of these ranges, the correction occurs. This pattern has held for nearly 10 years. Maybe at some point it will change, and we'll see a strong prolonged downtrend, or conversely, a strong impulsive upward movement. But in the current conditions, what we are seeing is just a local trend within a framework of correction. The price is now approaching the trend line, and there is a possibility that the Canadian dollar will continue strengthening, meaning USD CAD may continue to decline. Accordingly, GBP CAD is also likely to move lower. There is no profit this week since there were no close trades. Let's move to the final currency pair, NZD CAD. This asset shows a similar situation to AUD CAD. We're seeing a downtrend, although it's not so clearly expressed. In general, the market has been moving in a very narrow range for several months and hasn't broke out of it. This suggests that the market is still in an accumulation phase, and the longer this phase lasts, the stronger the following distribution phase is likely to be. Most likely, we're going to see a downtrend, although if we take a look at the daily time frame, we can spot a previous short-term uptrend if we ignore the recent speculative market noise. However, after that upward movement, it becomes clear that the local highs are gradually decreasing, even though local lows are still holding. So we can expect a scenario similar to Audi CAD, a price decline that should help us to close all those trades we've been holding since April. The situation is relatively stable, not as critical as with GBP, but we still need to close those positions, and the sooner the better. So for now, we're waiting for a correction on GBP, and we hope to see that happen next week. If you enjoyed the video, leave a like and subscribe to the channel. Thanks for watching, and see you next week.